Hey, best ever listeners. Welcome back to the best ever CRE show. This is Beyond Multifamily. I'm Amanda Cruz, joined by Ash Patel. Every Wednesday, we're breaking down deals and talking to investors who are anything except apartment investors, really. We do industrial, we do office, mobile home parks, self-storage, everything that isn't apartment buildings. So we'd love to chat with you. If you are an investor in something that is not single family houses or apartment buildings, go to Best Ever and apply. We would love to have you on. Ash, what's up?
To reiterate that, if you hate dealing with residential tenants, come talk to us. We'll find you a better way. Today's conversation with Adam Craig kind of blew me away. This guy started out with a ton of single family heavy lifts and applied a lot of that same logic and lessons learned to doing commercial buildings, but not just commercial buildings, really commercial buildings that nobody else wants.
No, as soon as he said a couple of words off the bat, I was terrified. Like, hold on, what kind of deals are you doing, man? But he was incredibly impressive. I mean, Adam kind of built up his business in single family and then transitioned. And he said this after we already were done recording, but he said, Ash, you were a big mentor of mine. And, joining your group was honestly one of the things that got me into this. And that got cut off. But Ash, kudos to you. He really said you were beneficial in that.
Thank you. And Amanda and I are in the same mastermind. This was a student of ours many, many years ago. And, the other thing that really struck me is that he didn't use these heavy lifts as a stepping stone. He's still doing the heavy lifts and loves it, has great systems in place. And by the way, best ever listeners, if you are interested in the mastermind that is Beyond Multifamily, go to bestevercre/Ash and you can find out more information. But yeah, this conversation blew me away. I knew he was very successful. I had no idea the caliber of success he had achieved.
Yeah, he's doing some cool things. Ash, one other thing, you and I hopefully we'll get together before then, but if not, we'll both be at the Best Ever Conference in February, which is always a really good time. And so Best Ever listeners, if you haven't already gotten your ticket, you can go to besteverconference.com and it's podcast 10 for 10% off. Come hang out with me and Ash. We have a great time. Lots of really awesome, successful investors are there in Salt Lake City in February.
Yeah, you will meet people that shape your future there, whether it's connections that become investors, mentors, partners. It's just phenomenal networking. So if you've thought about going, you need to go. And please say hi to us when we're there. We'll love talking to you.
Heck yeah. All right, Ash, let's do it.
Let's go. Adam, what's happening, man?
Hey, what's up, Ash? Nice to see you again.
Great to see you. I see a lot of the deals that you post about, and it's, vacancies that you're trying to fill, renos that you've done. You've been doing some heavy lifts on buildings that are pretty unique. And I dare to say buildings that not a lot of people are chasing. Give us your backstory, your first deal, what you're working on now, if you would.
So the backstory would be, did the single family residential thing from 2013 till 19. 2019, I kind of stumbled into my first commercial purchase. From there, I basically never looked back. It wasn't too long after that, I joined the commercial mentorship and you kind of convinced me residential's not the devil, but it's not what I want to go after, though. I do see you had a residential purchase over there. So, so I've just been doing nothing but commercial since 2019. I've got 13 commercial buildings now and still have 29 single family homes, but I'm not growing that part of the business.
Are you not wanting to dump the single families?
I was up to 45, so I've been dumping them strategically, year by year, time by. I'm still have extremely significant cash flow, and the Cleveland market has been doing some major appreciation over the last 5 years. So I still look at the value of the portfolio and I multiply it by the appreciation, and every year there's a pretty substantial return. So I do plan on exiting those as the years go on.
Are you not worried about the music stopping and prices coming down? Average price in the U.S. right now is $420,000 for a house. Seems high.
I am worried about that. And I've been paying attention to the national market. And I know Florida and all the cracks have been showing, and those markets are going down, and the Midwest may be next. So I've been paying attention, and this may be a year where if I have people move out, I might liquidate more than usual, because I do see that there could be a potential for the music to stop, as you say.
Good. And what was your first commercial deal?
The building I'm sitting in right here was my first commercial deal. It's about a 4,000 square foot office building. In terms of numbers, it's nothing to write home about, but it kind of launched everything. I was looking for an office space to rent because I had a newborn and the home office thing wasn't working. Came across this old historic building in a real trendy downtown area I grew up in. Ended up buying the building. I leased out about 4,000 square feet. I occupy about 900 for myself. Not a huge cash flow killer, but again, it was just, this was the building that made me realize I could do it. I bought this during COVID, leased it out during COVID. So I knew if I could do it during COVID, I'd be all right.
Adam, how much did you pay for that building?
This is a $275,000 building. Put about $40,000 into it. And I had it appraised for maybe $390,000. So it cash flows me maybe $1,000 a month, but it's a free office on top of that. And the location is prime. Most of my buildings are not in prime location. I seem to make more money in the less prime locations, but this is not what I would consider an investment. It's more of, my baby.
Now, you said a couple things in there that terrify me. Old and historic. Tell me about this investment thesis, buying an old historic building for your first commercial purchase.
Yeah, that was not what I was looking at. I bought it from an attorney who rehabbed it in the 80s. He was winding his business down, and he just so happened to be a big historic buff. So he got all the records on this building. It was from 1852. They operated on Civil War vets. There's like a little concrete pad up by the street that I didn't know what it was, and it's actually for horse carriage drop off from the 1800s. So, I'm not a historian, but it's kind of cool. It's got some character. In terms of the structure, it's a little crooked on certain floors and whatnot, but the bones are good, and there's no big surprises or anything. It's not a massive building.
Stone
when
foundation.
You're getting in,
all right, stone foundation, right?
It has the stone. About half of it was an addition, so half of it has the stone foundation, and the other half is a little bit more modern.
Talk to me about the due diligence process. Your first commercial building, it's 100 and something years old. What does that look like?
Well, prior to buying this building, we were doing major rehabs on single family homes for, a good 6-7 years. This, in essence, is a single family home setup. It looks like a historic home. It's just converted to an office building now. So when I was getting into it, I wasn't necessarily concerned about it. It wasn't new to me on the rehab side. But when I ran numbers, I didn't exactly know how cap rates worked. I didn't really know how commercial was valued. I just had a rough idea. So I just added up how much rent I thought I can get, and I added up my mortgage, and I said, if there's some spread between there and I can get a free office space, it's a go. And actually my results were a little bit better than anticipated, and there was a little bit extra cash on the side too.
Are those the properties you tend to take on where you need to go in and do significant renovations, even in the commercial space now?
Yeah, I've never bought any, I guess you would say turnkey property, except maybe my own home. But no, every property I've ever purchased from 2013 till today has been a project. Some bigger than others. We had a commercial building that was more of a lease up and carpet and paint type stuff than a major overhaul. So it's not like we're taking every building down to the studs or anything.
Dude, that's like totally different than what Osh buys, than what I would buy. I want to hear more about this. How do you find opportunities? Where do you go looking for deals?
Something to what you said first is a lot of investors call me asking me questions, and I do have to remember, like, not everyone wants to do this crazy heavy lifting. These people, for the most part, have 9-to-5 jobs. They're looking to put some money in commercial real estate, so I have to curb in my advice to realize, hey, you're not going to be able to devote this much time and energy on these heavy lifting projects. But back to your question, every property I purchased has been on market. I have no off-market commercial properties. Usually they are stale listings that I'm able to make some lowball offers on. And once in a while, it's a mispriced listing that I'm able to jump on really quick. But for the most part, all on the MLS, LoopNet, Crexi.
So there's not a lot of people chasing commercial relative to residential. But then couple that with some of these heavy lifts, the competition's almost non-existent, right?
Yeah, I mean, I came from the residential space, which back in 2013, I mean, I was buying anything I wanted. There was no competition. But as you know, 2019, 2020, that all changed. So my transition into commercial from residential wasn't because of the increased competition, but the timing couldn't have been better because residential became extremely difficult. Higher rates, higher prices, tons of competition. So yeah, I'm used to getting these bids in super quick. And I had a couple properties on the commercial side that I bought, and I got the offer in within like 24 hours of the listing. And the agent just seemed nonchalant and said, well, we don't have anyone else, looking at it. So yeah, we'll take your offer. So I wasn't used to that. But that is definitely what I see in the heavy lifting commercial side. A lot of people can't do it.
Adam, I used to do these heavy lifts on buildings that nobody wanted, but I might have done that maybe the first 5 or 6 years of investing. And then I got lazy and I'm like, I'm not touching these deals. It's too much work, not enough meat on the bone. Why do you keep doing this and not go for some of the easier deals? Maybe they're a little bit less money, but are you going to get to a point where you're like, screw that. I'm not doing this.
So when I was on your podcast, I don't know, about 4 years ago, I had just bought my third commercial building. It was a 25,000 square foot disaster. We rehabbed that thing for what I thought would take a year. We rehabbed it for almost 2 years. Spent way more than I thought. Actually got less rent on that one than I thought. But in hindsight, I'd probably buy it again because I learned so much rehabbing a 30,000 square foot commercial building. But I also learned not to do it again. So I haven't bought anything that is that amount of work. And I have sprinkled in some lease up buildings. I just bought a little 4-strip retail building that, we just did some lipstick on the outside and increased rents on the inside. And it wasn't a home run, but like you said, it was easy. It was quick. So I do the big lifts because I'll share some numbers with you on some future deals as we go on. But, the return on some of these are great.
I want to dive in. I'm excited.
Yeah, I want to hear the numbers.
Pick one. Pick a run of the mill one. Like not your best, not one you lost money on yet. Let's just pick. What does a typical heavy lift look like? I
also want to hear the 30,000 square foot one. What kind of building? What was the rehab?
So the 30,000 square foot building was in a downtown area. Big obstacles for that one that I misjudged were the no elevator and no parking lot. That made for... we did a great rehab, but there were a lot of tenants we couldn't take on because of ADA compliance and whatnot. So, I expected to get roughly $20,000 a month for that building because there was only about 20,000 square feet of leasable space. I ended up getting about 15,000 and it took way more money, much more money and much more time than I anticipated. So again, that was a learning experience. My cash flow on that building, maybe $4,000 to $5,000 a month. I was able to refinance out of it and get every penny back out, but I didn't get any additional beyond that. So I basically, it was a wash on the investment and I cash flow a little bit.
Adam, there's probably not a large pool of buyers wanting to buy that building either, is there?
No, I've talked to a lot of people since then that tell me, I looked at that building and it was just too much work. And they were probably right.
But even now
that it stabilized, though, why is the buyer pool low, Ashwari?
Because a building like that, one, it's older. Two, the number of tenants, my guess is shorter term leases, right?
Shorter term leases. We have our anchor tenant that has a long-term lease, but the smaller ones are short leases.
And I've got buildings like that also where there's really no market to sell, but it cash flows. It's a write-off.
I don't understand. Why is there no market to sell these? It's a stabilized building. Maybe not for the price you want it for. Yeah. Maybe it's not a 6 cap, but why can't you sell it for 8.5 cap?
There's not that many Adam Craigs and Ash Patels starting out there.
You guys are in Ohio. You guys are teaching everybody how to do commercial real estate. Can't you find a buyer?
I get it. There's just not that many people that want to take on the management of multiple tenants, shorter term leases, potentially older buildings, even though, you guys should follow Adam Craig on social media. His rehabs are phenomenal. I mean, you do a great job with them. But even at that, people want stabilized, easy. They fear tenant turnover. And those buildings, they're a lot more work than a 4-unit retail strip.
Fair.
100%.
And gross leases too, right? I'm assuming.
Yeah, it's usually gross plus utilities. So yeah, no triple net, very, very little of that.
So you're better off holding on to that for the cash flow. And, I've had buildings like that where the area that it's in, it took forever, but it finally starts to get coming up and revitalizations. So you hold it, right?
And on the take forever note, part of the reason we do this is to fill them quickly, right? I mean, so I'll go over one of my better deals with you.
Wait, hold on.
Yes.
This was 30,000 square feet. How much did you pay for it?
Oh man, I don't know. You guys aren't from Cleveland, so maybe these numbers won't make sense. I paid $190,000 for this building.
It was in rough shape.
$800,000 rehabbing it. So
you spent how much?
$800,000 rehabbing
$800,000. So you're $1 million into this building,
and assuming it's all cash, nobody's giving you an $800,000 construction loan.
All cash. So I was burning some high interest funds at the time. Luckily now I have some better sources of funding. But yeah, it was a tough 2 years, no doubt.
What is your debt on it? You got $1 million loan on this property after you stabilized it?
Nope. I got about an $805,000 loan. It was appraised at about 1.3, and I got my money back and 7.4. Not a great rate at the time. So I look forward to refinancing that in the future.
At a 30,000 square foot building with short-term gross leases, what do you think you could sell that for?
I haven't tested the sales market, so Ash would probably know better than me. I've just been acquisition mode. I have other buildings that I've had assessed by brokers who were interested in selling them, and they've come up with prices that were similar to what I would value them at. But if the appraisal on that building is 1.3, I might expect maybe 300,000 less than that. So something like that with the short-term leases.
You did all that work to basically break even on valuation then?
Well, but hold on. He's cash flowing $4,000 to $5,000 a month.
Yes, you're getting cash flow, but on equity, you're essentially net zero. But you did the upfront work for 2 years to then buy yourself $4,000 to $5,000 in cash flow a month. And is that free cash flow that you're actually getting, like after reserves, after taxes, all the things?
That's free cash flow. But keep in mind, I just told you maybe my worst commercial deal out of the 11 or 12 that I bought.
Well, $4,000 to $5,000 per month in cash flow is pretty damn good for a lot of people who are trying to leave jobs and get into commercial real estate.
But the amount of time and energy put into that, it was immense, and not equal to $4,000 or $5,000 a month in my estimation.
However, Adam, my guess is you spend less than 30 minutes a week on that building. Now,
I mean, yeah, once they're filled up, they're very, very small.
Yeah.
Think about how much effort it takes to go find how many single family houses when you're first starting out for the first 2 years. Like you put in a heck of a lot of work and you had the expertise to pull it off, which a lot of people getting in don't. But I think when you're coming up in real estate, spending that 2 years to then make $60,000 a year in cash flow on a way more passive basis ongoing, that's a pretty good trade.
Yeah, and again, less than 30 minutes a week. My guess is 10 minutes a week is what you put into this building.
Yeah, and keep in mind, we did a cost segregation on the building. The mortgage is being paid down every year. The 4 things that go into real estate investing is not just cash flow. So there are a lot of other benefits that come with the building. It was in an opportunity zone, so I am getting, if I comply with all the opportunity zone compliance issues, I'll be able to sell that without, maybe you can
capital gains.
Without capital gains,
yep.
Yeah.
And Adam, is this building all offices? Is this the one that you have an event center in?
It is, yes.
Okay.
Yes.
So tell me more about the makeup of this building.
So basically, second and third floor, you can consider office condos, just a lot of hallways with rooms off them. Some of them are bigger, but mostly your office type people, insurance agents and real estate agents. The first floor, we signed a lease for $5,500 a month for this event center. Got through all the variance and compliance issues, and at the last minute, the fire department measured it, and they said, "Hey, you guys are over 5,000 square feet. You're going to need a sprinkler suppression system." So we got quotes on that, and it was like, about $75,000 for the first floor. But the kicker was there was no fire suppression between the floors, so I would have had to do the whole building at a tune of about $350,000. So we had to go back to the drawing board with the tenant. I renegotiated her lease rather than lose her. So I'm getting about half of what I wanted to get for that floor just in order to keep her.
And is it still an event center, but just less
still
capacity?
An event center. Yep. And she's kind of doing business with 2 hands behind her back because she can't do big events. So
yeah. The best way I've found of selling these types of buildings is to the tenant who's paying the most. So, and I've done this a lot where whoever's paying the most, whoever has the biggest spot, you go up to them and say, hey, look, I know you're paying $5,000 a month in a lease. How about you pay $4,500 a month and you own the building? So
that idea.
As you start selling, you'll see the numbers are such a win-win where they're going to pay over market for your property and they're paying less every month in a mortgage instead of rent.
I see.
And
yeah, I like that idea.
The numbers almost always work.
I also really like these small office buildings for investors who are getting into commercial. You work harder for sure, but let's say you're doing short-term rentals. You're working your butt off at that anyways. If you're willing to do the work, you can get these for a really good basis and they'll make a good amount of cash flow for you. And when you're starting out, cash flow is more important than the appreciation side anyway. So it's a good entry play.
And I always say it's a trade-off. I mean, it is more work, 100%, but you can fill the units quicker because there's more tenants, more tenant pool that can afford the units. Typically the square foot price goes out the window. You know, you can charge $12 a year, but that goes out the window on these small little rooms. You just charge an obscene amount on a square foot basis. So the cash flow is significant, but the work, can be significant too.
And you have to deal with tenant drama. You have to deal with things that you don't necessarily love to deal with as a commercial investor, but you get paid for it.
If I just got a Wells check, if I got a monthly check from Wells Fargo every month, like a lot of, Class A buildings are, that would be nice, but I'm not quite there yet. So.
All right. We got the worst deal out of the way. Let's hear your best deal.
Yeah. So you always called them the unicorn deals. And ever since that not terrible deal, the Paynesville deal where I'm cash flowing $4,000 a month, things have been immensely better. A lot of my projections have come to fruition and the appraisals have been hitting where I thought. But 2 Februarys ago, I think it was 2024, it wasn't off market, but it wasn't on LoopNet and it wasn't on Crexi. This guy just had it listed on the MLS. So it was definitely under marketed. It was about a 22,000 square foot office building in a city called Bedford. We bought it for $460,000, ended up rehabbing it in about a year, maybe 9 months to a year. It was about 300 and let's call it 340,000 on the rehab side, just for even numbers. So we were all into it between $700,000 and $800,000. The kicker was we put a for lease sign on this building, giant banner sign, and my phone did not stop ringing. And we're in a community of Bedford, which is like a C or a B minus community, $50,000 a month annual income, not a terrific area by any means. But we were getting blown up for this building. So it took about 3 or 4 months to fill roughly 12 different suites, ranging from some of our biggest one were maybe 4,000 square feet. The one unit that's worth going over is an old dentist office was in that building. It was about 2,500 square feet, and they were charging roughly $2,500 a month. It was beat to hell. I mean, it needed rehab. It was old. I thought about marketing to a dentist, but then we had been signing up so many of these salon girls that I decided let's build walls around these dental stations because the plumbing's all there and just make these little salon lofts. So we built about 9 or 10 rooms within this dentist office, marketed them between $500 and $800 a month. Our cash flow on that unit alone is $5,200 a month, as opposed to the $2,400 a month the dentist office was bringing. And we basically have a waiting list, and that's one unit within the building. So just to get back to numbers on the whole building, about $800,000 all in, had it appraised for $2.2 million, got a loan for $1.4 million, and took home over $500,000 in cash back. Cash flow on that building, even with the $1.4 million loan, is roughly $6,000 to $8,000 a month. Obviously would have been a lot higher at a lower rate, so we have room to improve when rates drop.
Hell yeah, that's a huge win. I mean, you're talking about all in, 40 a foot, and you got an appraisal of 100 a foot plus cash flow. Hell yeah, that's a huge win. No, these salon type scenarios, they have them where I am, and the owner of the building also helps the salons, with tenants and setting up their appointments and locking and unlocking and different stuff like that. Are you totally hands off, like let them get their own customers, or are you involved in any part of the salon?
Yeah. So when I say salon lofts, we are basically a hybrid between your traditional leasing and a salon loft. We give them a room with a sink and some plumbing, and that's it. But I actually bought a building 2 months ago that I'm going to test a much deeper salon loft theory on. We're going to outfit it with chairs, shampoo bowls, the works. I'm not going to do any advertising, I'm not going to get into the weeds like that. But we're going to furnish them and see if we can get more money for them.
All right. Do you not have a bone to pick with him about all this? How much you're running a business now?
I don't hate on that, Osh. He's hustling. He's a hustler. He's going to spend his time renovating, or
I
he's
have a
going
team.
to.
I have a team. I walk my dog and go to the gym till I don't sit at my desk until 12:30 in the afternoon.
Okay, good. Now I'm proud of you. Good.
Okay.
Okay. So I like that you're not just doing one of these. You're looking at scaling them, which is great. And I've got 4 or 5 salons. Most of them are the loft type concept, and the owners of them have to manage mostly women salon employees. And there's a fair amount of drama. There's then the issue with the hair color that they have to pay for as they get it out of storage. And it's very expensive, so it gets stolen. There's a lot of drama associated with fully running a loft type concept.
You also don't need to
agree.
have all hairdressers. That seems like overkill. I mean, there are a lot of different tenants who have a similar business that can't afford their own spaces.
I was being,
right?
I guess, generic on the term, but we have masseuse, we have
right.
people to do makeup, nail techs. I mean, the works. The biggest complaint we get is the smell from the nail techs, but we try to keep everyone in the same suite in a similar business. That way we don't have, the home healthcare business smelling nails and whatnot.
Good for
I
you,
think there's
man.
a big play there. They have companies in North Carolina that's what they specialize in, and they even have created apps to help their tenants with bookings and stuff like that. That is their entire business. So at least in this area, there's definitely a market for it, and they are always full.
Yeah, and that building, I think we broke down into maybe like 10 traditional suites plus our maybe 10 salon lofts, but I don't think we would have filled it nearly as fast or for as much money. I mean, we have home healthcare businesses in there and salon lofts. That's like 90% of our tenant pool in there. So another reason we're tailoring to these girls and guys is just to fill the buildings quicker. And Ash, I understand what you're thinking, but about 3 years ago, I hired a guy and my wife and another part-time person. And I've really got some separation between me and the tenants now, to the point where I can almost ignore my phone and just direct them to call somebody else. So.
Good. That's a huge step. It's a big.
What does your team all look like? Who did you say you hired?
I hired a guy to basically field property management calls for maintenance requests. He'll call the appropriate repair person and send them out.
How many units, tenants do you have that he manages?
So we have 170 to 180 tenants. 29 of them are single family homes, and then the rest are all commercial.
Heck yeah. And he does all of that for you? He's your asset manager across the board?
I have to, no assets, just tenant manager, but I have to jump in on maybe 10% of the calls if they're expensive or unusual, but he's able to handle about 90% of them. My wife's a huge part of the team. She does a lot of the leasing side. We have a bookkeeper. We have an admin. I mean, I've delegated a lot over the last 5 years, and my wife freaks out every time I buy a property because, we have 180 tenants. But I keep telling her we could continue to delegate her. If she gets sick of it, we can continue to delegate that away. So.
And I'm assuming you have property management software as well, right?
Yeah, I mean, that makes everything. Without it, I don't know how they used to do it back in the day.
Good.
Without it. Yeah.
Geographically, are you sticking close to Cleveland?
Yeah, everything I have is within about a 45-minute drive of Cleveland. I don't own anything in Cleveland proper, but the suburbs. So.
And, a lot of people, Adam, are hating on office, but you and I have been doing this pre-COVID, and our offices have never taken a hit. Am I right?
Yeah. I mean, I bought some office buildings that people couldn't fill, and we were able to fill them. But, it goes into that, smaller tenant, more work scenario that a lot of people aren't willing to do.
Are you heavily eyeing office right now?
I mean, I'm buying anything that's on sale. I've tried to look at industrial and warehouse for 3 years, but I haven't found any building that I can add significant value to. So whatever's on sale is traditionally what I bought. But it has been a lot of retail and office.
Your criteria for buying, I'm sure you buy plenty of vacant buildings, and that doesn't scare you, right?
Yeah, I much prefer to buy a building with some income coming in.
Yeah. What's your biggest metrics? Is it price per square foot? Is it surrounding rents in the area? What do you look at most to know that this building could be a home run?
So I'm not as big on macros as maybe some other investors, just because I want my building to perform on day one. It's difficult to say that I want to get ahead of this wave of influx of people. And a lot of times I have investors that I need to pay back, so I can't necessarily wait. So I would say similar to when I did single family homes, it was really caveman like, but I look at what I thought the value would be and what I'd purchase it at, and I saw what the wiggle room was in between. And for instance, that building that I just told you about, I had assessed it around $2 million, and I knew I was going to get it for 460. So I mean, I knew I couldn't go wrong. Basically, that was my assessment.
Do you BRRRR everything?
Yes.
All your properties? Do you, based on what you're saying, it sounds like maybe BRRRR wouldn't necessarily work without going in and doing these heavy rehabs in your area. Is that a fair assessment?
I mean, you could. I think it'd be a lot harder. People don't want to work too hard for these buildings. So more work, more money sometimes.
Osh, you don't BRRRR. You just sell, right?
Yes. So my philosophy is quite different. I don't want to hold anything long term. I want to add 80% of the value, leave 20% on the bone for the next buyer, turn and burn. And that's, that could be 2 years up to 5 years. We typically don't, and especially if we have investors, I never hold anything more than 5 years because they want a return on their money.
And I'm 37 now. There may be a point now where I don't feel like being in the weeds as much as I am, and that might change my strategy. But I honestly enjoy what I do. It's not stressing me out. I was more stressed out in 2016 doing 15 single family homes a year than I am doing 2 commercial buildings a year. So in terms of my time and my stress level, it's at an all-time good level.
You were smart to put systems and processes in place to where you can enjoy it. And my guess is you focus on the things that make you a lot of money and that you enjoy.
Yeah, I don't enjoy conversing with tenants, and I try to not do that as much as possible.
Yeah, you made it.
Adam,
yeah, go ahead.
You mentioned something interesting on prime versus non-prime locations. You tend to prefer the non-prime locations. Can you dive into that a bit?
I mean, when I run numbers on buildings that are in like Class A areas, I don't see that the increased rent is going to make it much as profitable as the buildings I'm buying now, in essence. I'm sure they're nice, fancy areas, and maybe you will get some appreciation or more appreciation than my buildings. You most certainly will get more appreciation than my buildings just because of the areas I'm buying in. But at least I know on day one, I have a lot of built-in equity. I have a lot of built-in cash flow. So if the market changes, hopefully I'll still be okay.
So because you hold long-term and you care more about cash flow, the non-prime locations trade for less per foot, right? So you're just getting a better deal. You can cash flow better. And that's your thesis.
That's my thesis. Yeah.
Fair enough.
Adam, earlier you mentioned you have better sources of funding now. Can you talk about your funding in the beginning and how that's improved over the years?
Yeah, when I did the single family stuff, it was all hard money lenders. I was still BRRRRing, but I had, hard money lenders loaning me at 15% interest plus a lot of closing points. And those terms got better as I, grew. When I got into the commercial side of things, the numbers were considerably larger. So it'd be much more difficult to have 15% interest on an asset that's not bringing in any income. So I started, raising private money during that time. So I have quite a few private investors. I found my wife calls him my sugar daddy, but I do everything I can by myself. And then I have a guy in Texas who will do a equity split with me. We have a 60-40 thing worked out, and I call him my sugar daddy when I run out of money. But, I've been doing this long enough now where I have some lines of credit and I have my own cash where I'm needing him less and less. But, my financing overall is much easier.
Tell us about this guy in Texas. What's the setup?
Pretty wild story, not wild, but unbelievable is, I posted an ad on Bigger Pockets, probably around 2015. I had a single family home I was looking for $50,000 on. He responded to the ad. He invested with me without ever meeting me. Did maybe 4 or 5 deals. It was just debt deals, no equity. He'd get 12, 10%, and I'd give him his money back. After about 3 or 4 years, he was at the point where maybe he was 300,000, 400,000 with me. And I started doing the commercial side of things, and he saw how that was going. And he just came to me basically and said, hey, listen, I'm an oil and gas guy. I got a lot of cash. What do you think about this idea? And I said, that's the phone call I've been waiting for a long time. So it worked out well. We've got we just closed on our 5th property. Out of 12 commercial buildings, we have 5 of those together. So.
What does the partnership look like?
Man, he's just, I remember running this by Ash years ago when we were doing it, because typically you see much more technical raises, but 60-40 split across the board. We split the equity, 60 me, 60 cash flow, 60 everything. So when we go to sell, it'll be a 60-40 split too. And it's been great. He's the capital. And
he funds 100% of it?
Yep,
you do 100% of the work?
Yep.
Do you get paid for the work that you do?
So I was initially, when we were working out the operating agreement, I was going to come up with some type of, fee for my services. But when he told me he wasn't going to charge me any interest on a $1 million loan, I said, okay, well, I'm going to not charge you any fee. So it's just been real amicable. No fees.
Heck yeah. I need a zero interest partner. That sounds great.
Well, he gets it. Well, and I've had the luxury of being able to see some of his financials through some of our refis, and he's worth significant money, in excess of 20 million. And I said, what are you doing with a guy like me in Ohio? But we're not 1031. We're doing cost segregation studies on every property because he has extremely high income and a very heavy tax situation. He gets all his money back in every deal, which, that was music to his ears. So it's been a win-win for both.
Do you give him 100% of the depreciation in that case, or do you guys also split that?
We split the depreciation too, yeah.
Because you probably don't even need depreciation, right?
Some years I do, but no, if I do some sales, there are years when that comes in handy. But no, I wouldn't be doing as many of these as if he wasn't interested in doing them. So.
That's good, man. You're a case study on success, going from residential to commercial and killing it. Now, Amanda asked me a question about me burring or selling, and she was setting me up to have this conversation. So, do you not like getting really big checks when you sell something?
It's fun.
I got a $500 and some $1,000 check without selling something, and I don't pay any taxes on that check.
That's not typical though, right? That was like your best deal. Usually you get some back. What's your typical cash out on a burr?
Out of 12 properties, I probably had 4 or 5 of them that had 6-figure cash back. That was the highest one by far. I've had some where I've broken even and some where I've gotten, 30 or 40. And I'm always weighing the cash flow. I don't always do max LTV. I do take a lot of cash now as opposed to in the cash flow though.
Is there a goal you're trying to achieve with assets under management, number of tenants, properties?
My wife asks me that all the time. And similar to my Texas partner, he finally flew up to meet me after we did, over $1 million in deals. And I asked him about his business, and he's only in his late 40s and he's obviously very well off. And, everyone says, why are you still doing what you do? And he said exactly what I told you earlier. He said, I get up every day. I like what I do. I'm excited about it. Again, he's in oil and gas, so he has a completely different business, and he has some other business ventures as well. But almost becomes the chase and the competition and the struggle of turning something around. The numbers are always nice, but I enjoy trying. That building I talked about, when I pulled up to it, it was a ghost town. It was falling down, and now if you pull up to it, the parking lot's jamming. People are all over the hallways, and it's cool to see that turnaround.
Good for you. Adam, a question on your first hire and building out your team. You and I know, have been in the same spot where we were inundated, a lot going on, hard to manage everything. Was that a struggle hiring your first person?
Yeah, the first was, as they say, the hardest. I just felt like I had done everything the way I wanted to for so long that it was difficult to tell someone how I wanted to do it, but then you realize what you were doing is not that difficult, and you pretty much can train someone to do most of these things. You still have to stay on them, of course, but it definitely opened my eyes to the realization that if I have 1,000 tenants someday, that I may not if you need to talk to any of them, I don't have to necessarily visit any of the buildings. I can still be hands off with a big operation.
What's your advice to the best ever listeners on when they should hire somebody?
I would say when the income from your business can support it, and when that hire will enable you to do things that will provide you more money than that hire costs you. For me, I started to value my time many, many years ago, but if I can find someone to take a task off my plate, I do it almost immediately. And my wife, again, is at the point now where she's not maxed out, but she's feeling, she's taking on a lot. And there will be a time where we dish off some of her work to another admin. What she does is valuable, but it's not difficult to train.
I just thought of something. I'm going to share how stupid I was back in the day. I paid $20,000 for a coach for 6 months, and then I paid $1,000 an hour for another coach, and I still hadn't hired my first person. And these guys are begging me, like, dude, you need like 3 or 4 people. And, my immigrant upbringing, bad mindset was, what if I hire somebody and obviously they don't do it the way I want, blah, blah, blah. But my other fear was, what if I hire somebody and my systems or my work is so chaotic, they're just like, I can't do this. And my third fear was, what if I hire somebody and they clean everything up and they run out of work? 3 really stupid fears, right? But then when you hire your first person, it becomes a drug. And for the first time in like 10 years, I had nothing to do. Like, my to-do list was done. That's never happened, right? So yes, anybody out there that's inundated, has the funds, like Adam said, to hire somebody, you got to do it.
And believe me, Ash, I see your Facebook. I see you're in like a different state at a different cabin every other weekend. So I know you're living the life.
Well,
but
man,
I do have a lot of properties and a lot of tenants. But we're going to the Cayman Islands at first week of December, and I'll be on my phone for maybe an hour or 2 a day, and leave it at that. It's not terrible. So
you should set a goal for being on your phone no more than 15 minutes a day. An hour
I could do that.
or 2 on vacation is too much.
I agree. But I always tell my wife, we're on vacation first week of December on a Tuesday while everyone else is in school and at work. So it's a trade-off, but I'm still on vacation on a Tuesday. So.
Good for you. Adam, awesome story, man. Great catching up with you. Amanda,
Likewise.
any other questions?
No, I appreciate it, Adam. Thanks for jumping in. I know we've kind of seen each other before, but I hadn't really heard your story. Incredibly impressive. I think there are a lot of pathways here for anybody looking to get out of a W-2, get out of residential and into something different. Very interesting story. Thanks for sharing, Adam.
Well, thanks, Amanda.
How can best ever listeners get a hold of you if they want to reach out?
My website, cleinvest.com, or my email, adam@clerealestategroup.com.
Awesome, brother. Thank you again.
Thank you.
Best ever listeners, thanks for joining in today. If you enjoyed this episode, make sure you leave us a 5-star review. Don't forget to share it with somebody who could find it useful. Of course, follow, subscribe, and have a best ever day.